Hey, we can hear me? It doesn't even tell me that we're going yet. Can you hear me? Give me a knock knock for the here. I can see myself. I can't see that you can actually hear me though. Going once, going twice. There's Daniel. Daniel coming through in the pinch. How's everybody doing this morning? What a morning. We are live. Yes, we are live. So, what a morning. I can't believe it. 4.5 million. Who thought that number would be that great? I seem excited about a number that's already being kicked around and ballyhooed is, it's good, it's bad, who knows what it is. I've got a lot of energy today. Little bit of coffee with some espresso this morning. So you're getting a special CJ. I've even changed some of what we're going to do. Yeah, I told you we were going to talk about high flyers. I was going to be a little bearish on some names yesterday. We're not going to do that. We're going to look at something different. Forget about the high flyers. I'm going to show you 3 fear and greed trades. I was updating data late last night, looking at short interest, looking at my short interest model that pops out a lot of short squeeze opportunities. And you know what? What the hell? This is the kind of market where fear and greed are obviously driving things. So we're going to take advantage of that to a little bit. I get pulled into a market, and it's hard to get pulled into a market like this. But you know what? I'm gonna give you 3 of them. My night trader people, we're gonna have a couple extra ones at 11 o'clock, and actually a recommendation or 2 before then. But perfect market. The data just came out. Let's go to the slides. I'm a little excited here. Futures trading up 390 points after that jobs report came out. Here's what we're going to talk about today: the headlines for the trading. What are you going to be trading on today? What are you going to be trading on next week? We're going to talk about oil. I mentioned it yesterday. The oil trade is heating up. Saudi Arabia is kind of lowering the boom, saying, you know what, get ready for a nice price war that's going to take us into the summer as demand is going higher. Now, obviously, COVID-19 coming back has some implications on the demand. Cinnamon stick. Jesus, that's not going to wake you up like the espresso mix with coffee here, buddy. Anyhow, Saudi Arabia is kind of leveling off, saying, you know what, we're ticked off because people have been cheating, as they always do in OPEC plus. So they're going to lower the boom here. I think it creates an opportunity over the next couple of weeks for you. I've got 2 plays for you on that as well. 5 plays today. I guess I'm giving up the farm. And like I said, forget the high flyers. I was going to tell you about some companies that I think, like Zoom, that some of the air's got to come out, especially as we're heading into earnings season. And don't get me wrong, earnings season is going to be a little bit of a sticky wicket, as they say. But we're going to talk about 3 fear and greed trades today. One of my commandments comes into play on that. I'll give you the quick story behind it. And then my trading expectations for Friday. And actually, it carries over to next week as well. First, we have to look at the chart. You know how we do this every day. 3,100 on the S&P 500 above the 20-day moving average. If you're a trader, you like the fact that we traded above that 20-day. It tells you that the S&P is now in play as it was a week and a half, 2 weeks ago. We saw sideways action at the 3150 when this happened. We're going to careen right through that number today. Maybe 3,200 comes into play. This is one of those things. You've seen me. I've been bearish. I've been tepid, let's say. I've got another big time name here, a quote from him earlier this week that we're going to read about how he's bearish and sitting in some cash on the sidelines. But it looks like we're going to break that lower high, lower low type of pattern that we were starting to form that was putting the 3,000 level at risk for the time being. I want you to watch it as it goes into earning. And of course, the VIX down below 30, and it's going to move a little lower. I told you, and I'm standing by it, you need a hedge on premium as we head into July. August and September options are the best thing to use. You have to pick them. I can't give you that advice unless you're in, obviously, the night trader system, and then I'll give you details on it. But shameless plug there, by the way. Look at the 50-day and the 20-day coming together and converging. The 30 level obviously in play as well here. The problem is that 200-day is only about 6 or 7% lower. That equates to, if you've got an open position on the VIX, that equates to a little bit, maybe a 15% pullback from where it is right now, looking at August options. But we're going to be back above the 30. Mark my words, we'll be back above 30 in the next, I'll give it a week or so. Right before earnings season, you're going to see that volatility come into play. So let's talk about the headlines for just a moment here. Headlines, obviously, everything's coming into play with the earnings or the jobs report, but futures were trading more than 200 points higher overnight before that. Everybody was expecting that number to be, very positive. Now, 4.5 million, let's talk about the number for just a second, because concurrently, not only did the jobs report come out, but you also got the unemployment, the new unemployment, the claims numbers. That is still showing that there's a healthy amount of claims coming through the system. One or two reasons that could be happening. First of all, that is, remember, something that's updated on a weekly basis. We're looking at the jobs number that is a monthly basis. Philip, the drink is called, actually, I usually do it with chai, and it's a dirty chai. I call it a muddy chai sometime, but with coffee, I don't have a name for it. I digress. Anyhow, when we look at this labor report, it's showing us what happened in June. That weekly jobs report that just came out, the unemployment claims, is showing us what's happened over the last week. There's a disconnect between those numbers. Part of it is because we are going to have one of these situations where the unemployment numbers are going to lead. Think about this. This is exactly what we saw in March, when you were actually pulling down that first wave of COVID-19 was coming through, back when we called it coronavirus. And there were a couple of other names that we called it. But when that first wave was coming through, it is a situation where those jobs numbers, those unemployment numbers came through, and they showed us that there's an increase coming in the jobs report. Then the jobs report went through the roof. We went up to 14, 15%. Now we're at 11% unemployment rate. And those jobs numbers, the weekly numbers, are starting to increase again. So what I'm telling you is there's going to be a lot of people that are going to pull apart this employment report that we just got, the 4.5 million. It was supposed to be 3.5 million. Watch that over the next day or so. See how it settles out over the weekend. It's going to be a great trade driver today. If you are day trading, as so many people are, obviously, it's going to be a good driver that instead of just the market dropping off at 11 o'clock after the factory orders numbers come out, I think you're going to see a market that's going to drift all the way into the close. Jerry would tell you that it's going to drift to the close because the Fed always buys at the close. Today, it's going to be everybody lumping in. And I think everybody's all right with holding on to positions over the weekend. Look at what came out yesterday. More than 50,000 new cases of COVID-19 last night. We also have problems in Hong Kong. China's actually lowering a little bit more pressure on Hong Kong. We've got Apple that announced that they're closing 33 more stores right after the close yesterday. And you've got McDonald's that says we're not going to open up our dining rooms. We're going to keep them closed right now. You also have counties in California and Miami that are saying stay inside again. Things are done. Futures were still up 200 points before the open. This is a rally where people are looking at it. As much as I hate to say it, we have been here before. I wrote that to my night trader people yesterday. We have been here before. It doesn't end well, but it's not over just yet. As Jerry, again, I think it was Jerry yesterday, pointed out during our 11 o'clock call, or maybe during our 8:45. I said the trend is your friend, and he said until the end of the trend, obviously. The trend's not going to stop here. Not only was Tesla number one, they beat Toyota in terms of their value, but they also put up good delivery numbers. Tesla is a stock that probably, and I've said this before, as much as I don't like the company, the hubbub, I'm not going to buy one of their cars. I'm looking at a Toyota Tundra for the last 3 months. But Tesla is one of those stocks that it should be in everybody's portfolio. It is the modern day GM blue chip stock. Enough said there. Let's go back to the charts. I want to make sure that we get through everything today. So let's look at the morning's data reports are heavy with highly traded points. So we just got two of them, the jobs report and the weekly initial job claims. This is going to be followed up at 10 o'clock by factory orders and the durable goods. So this starts to get into the meat of what is happening with the actual production. Are we seeing any increase in production after the reopening has started? This is going to be a number everybody's going to watch. It could temper the employment report. Watch the data come through at 10 o'clock. Watch the volume increase. Trading volume should lighten up after that. 11 o'clock or so, after we start to see Europe close, you'll see the trading volume light up. We'll see it get a little bit bumpy there. But if you watch it, I think this is going to be one of those days. Call it a magical day, like Lieutenant Dan had his magic legs. What a great movie. Call it a magical day. I think you've got a chance where this market's going to float all the way higher into the close. And for that reason, I'm going to be looking at a little more to the bullish side of the equation. Pretty balanced out right now in the night trader portfolio. So familiar pattern with the catch. This is something that yesterday was just a great picture of it. Yesterday, we saw everything kind of split. I called it herding cats when I was writing my notes to you guys last night. Once again, it's one of those situations where the market was herding cats. The IWM, when we were talking at 11 o'clock, was down a full percent. The NASDAQ was trading up slightly. The Dow was trading in the red. Everything was going different directions. Financials trading 2% lower, blah, blah, blah. Then all of a sudden, you get Facebook taking off because they're addressing what's happening with their advertising revenue, people pulling back on it. You've got Mark Zuckerberg, who's basically saying, I've got this, I'm going to fix it. That stock was a buy when it touched down on its 50-day moving average a couple of days ago. The lighter than average rally took hold in the afternoon after we saw the same players, those blue chip big cap techs, the new blue chips, kick in and start to rev up. And that's when things took off. You saw Microsoft moving. It was a familiar scenario, and everybody loves familiarity, especially in the market. It's like the market's little, let's call it the market's little binky or its comfort blanket. It makes everybody feel good when they see those same names go up and they start to buy again. And that's exactly what we had happen right through the afternoon. So it was an afternoon that pulled everything up by the bootstraps. There was still some weakness out there. When you look at the financials, we've got a put on one of the regional banks in the night trader portfolio. It went up in terms of that bank went down. It was down by 3.5% or so. So there were some stocks down there. Xilinx, a semiconductor that we added a position on, was down 4% because it had a little bit of a hangover from the day before being up 7%. So there was some stuff that was down, but that familiar theme makes everybody feel comfortable right now. And that's what's going to continue to drive us for the next week or two as we head towards that earnings season. That's when we're going to get to the proving grounds. So one of the views, though, and this is the catch, Muhammad El-Erian. And if you don't listen to Muhammad, if you don't read, if you don't read what he's doing, what Muhammad El-Erian's doing, you're missing out on a big part of the picture. The gentleman is obviously, he filled Bill Gross's shoes. He's done it very well. He's been very cautious, but he's even said, kind of like me, I've been pulled into this market. This is a market that actually has gone off the rails and you get pulled in. But at the same time, earlier this week, he said he's got money on the sidelines and he missed the rally of the last 3 weeks. He's not putting money to work here. And it's simply because he's looking for the next catalyst, AKA earnings. It's not the jobs report today. We're up 420 on the Dow. It's not the jobs report. It's going to be the proving grounds for the next catalyst. So we'll take a look at that. And today's obviously giving us more, whether or not we trade higher 400 points at the end of the day, which I think we will, is going to tell you the credence of this jobs number. And again, I think a lot of people looking at this with, I got to talking their books a little bit, Jerry. I do believe the naysayers, but you know what? Let me get back to that comment in just a second, or your question there, because it's a great question. If you look at somebody like Muhammad El-Erian, he's got a book that he has to manage. He's not shorting the market. He's going long, and it's hard to buy stocks like this when they're long. Right now, you've got another 82% reading of the number of stocks in the NASDAQ 100 that are reaching into overbought territory. So I think it's hard for anybody to step into a market like that unless you have a specific driver, and that's what he's waiting for. The major market drivers for the next week. Let's talk about that for a quick couple of minutes here. Let's get into where I think you can make money over the next week. These are trades. These are not recommendations. Go out and buy this. This is just pointing you in the right direction, folks. You know, most of you know that I've got a couple of hunting dogs. One of them's named the Stone Cold Killer. She doesn't go out and get anything. She just points me in the right direction. That's what I'm doing today. I'm doing my best impression of the Stone Cold Killer dog here. So oil and energy, as I mentioned, you're starting to see some steam build up here as Saudi Arabia is indicating another round of price battles. They're going to go after Iraq, Iran, all the people who are putting more oil into the market and really kind of putting the pressure on prices here, pushing them down. Oil's trading almost 1% higher overnight on this pre-market activity, and the fact that they've announced this, and they say the demand is going to start to increase as we make our way through the summer. It's not going to be as big as it normally does because we're not all out there doing any summer driving, but there's going to be an increase nonetheless. Best short-term trading ideas that I have seen for the bouts, and this is looking through charts last night, looking through some of the data and the options market on these two an ETF and a company here. finding those undervalued from a behavioral perspective. So in other words, the market is not valuing them in accordance with their technicals. First one is the UCO share. This is one that is the Ultra Bloomberg crude oil. There have been a couple of people that brought this particular ETF up instead of the USO, the more widely traded USO. This is leverage. So we're closing in on $30. Round numbers really not going to matter with the UCO. It's going to pop right through that today, up 2.5 or 2.1% yesterday. What does matter is the fact that we're above that 20-day moving average. We're not overbought right now. Volume's starting to pick up on this as we see the oil trade coming alive. I honestly didn't think that you would see an opportunity. I feel like I'm visually pounding the table here for you guys. Didn't see the opportunity to go long oil. Right now, this scenario is playing out as a short term. Grab it while you can, 5 to 10% higher over the next week or two. I think the UCO makes its way up to $35 here over the next couple weeks as we see that oil war start to heat up. If you're looking for an individual company, when I went through the data last night, where are all the puts being played? Where's the short interest being added to it? Halliburton. The other big one here, which is the company or which are the companies that are going to be able to come out in a couple of weeks and say, our cash balance is fine. Our balance sheet is solid. We're going to keep paying a dividend. Big HAL, Big Hal, we're going to call him right now, is going to be one of those companies that's going to be able to do that and shrug off the, we're not going to be a Chesapeake. We're not going to be somebody that's got all this exposure to fracking. Look at Halliburton over the next couple of weeks. The stock trading just below that 20-day moving average. A lot of people here are going to like it because it's a lower dollar trade. Trading, it closed yesterday at 1247. When you look at the open interest on the options, there's a lot of put open interest at the 13 level, which is why we were seeing support right here last week, and that 13 level support kicks in all the way through August, and there's actually a lot of puts building up at the 14 level. Those of you that follow me on the night trader side know that I look at that open interest because it's a mechanical hedge in the options market and adds support to the underlying. So this is one of those situations where you can look at it and say, hey, once we pop above, you get a mechanical hedge. It's a bit of a delta and a gamma hedge in the options market, where you have these people that sold those options that are going to have to start going long to cover their positions, cover the wings. Again, the stock has been trading in a range here, oscillating around that 12, and you've got an RSI that is at 49.69. Perfect. Right in the middle, frees up some room. Halliburton trades up to 15, in my opinion here. That's where I'm looking at it from a technical price target. I like the play over the short term. Let's talk about a few others. So, and let me look here for a second. Remember how Bill Ackman tried to scare everybody because he was short? I bought the indexes when Ackman was negative, and boom. You know what? That was an amazing moment in TV history. I think that'll get played out. The gentleman made quite a bit of money, obviously, when that happened, because he was short. A lot of people have lauded him as there were some hijinks, let's say. I think Bill Ackman is he's the perennial short that, along with Citron, and he's not as vocal as some of these other short organizations, but Bill makes sense a lot of the time. Bill's a smart man. And I think in that particular case, he was probably looking at the market the way a lot of people were, and proverbially, maybe shuddering in his shoes a little bit. And I think he did believe it. If you look at it, that was a market in February and March where we ripped off 40% of the market value like that. Nobody's been through that type of market. Not even Bill Ackman has been. 2008 didn't generate anything like that. We had those down days where we were down 1,000 points or the flash crash, and there were a lot of things that happened, but there was nothing like this where you had just a full press by the bears that made a lot of sense. If you ask me, we've got another one of those coming back at some point. We're going to have a situation because this market is loaded up with bulls, and it's loaded up with a lot of inexperienced bulls. Look at Robinhood and how excited people are about using Robinhood. I use Robinhood. Don't get me wrong. But when you look at the accounts that are holding, and I pointed out a couple of days ago, the fact that you have people that were adding Hertz to their account up to this week even though now they're getting sued over a bunch of their used cars that are sitting in a leased warehouse, because that's what happens when you go into bankruptcy and all the shareholders get at the end of the line. These people are going to get a little bit of a wake-up call one day. As Dave Portnoy said, stocks only go up. They only go up until they go down. And all of a sudden, and right now, when they go down for a day because everybody comes in and starts buying it. But at some point, we'll have a little bit of that slope of hope kick in, and that's what the market will slide down. I am not preaching that it's going to happen here in the next couple of weeks. I'm just telling you that the black swan type of scenario is alive and well out there. And one of these days, it's going to land in the pond in my backyard. I don't have a pond in my backyard. You get it, though. I'm speaking figuratively. So let's talk about these three drivers right now, the fear and greed trades. So my latest short interest model update generated some interesting short covering trades last night. Looking at the data, and I feel like Dave Letterman, I've got the card right here where I've written down some information. 233 of the companies in my database yesterday broke above their 50-day moving average, and their 50-day moving average trends were moving higher. So in other words, their trends were friendly to the bulls, and they just broke back into that trend, that bullish trend. So at the same time, I pulled up 72 companies that have seen short sellers incredibly active, adding positions to the shorts, and their short interest ratios are somewhere between 6 and 19. I've got some that are right in the middle here for you, actually towards the lower end of the range. We'll talk about at 11 o'clock some of the higher ones here. But these companies are what you call short squeeze candidates. A short covering rally is simply where the greedy people that have been shorting the stocks and shorting, not buying puts, putting money on the table in a margin account. There's a huge difference here. You get a margin call when you're short and it moves against you. When a put moves against you, your premium goes away and you maybe end up with zero. This is the one where, just like in trading places, and it's not exactly a short cover there in that most people think it's a short. They were shorting the market. They weren't. But at the end of the movie, when the trading floor manager comes down and says, margin call, Dukes, that's what happens when you get the short, when you margin. You get that painful call. I've received it once, and it was the last time I shorted stocks on margin. That's why I use puts. But the covering rally is when those people that are short those shares on margin start to feel the pain from the stock going up, and they have to cover their positions. And in an awkward and cruel type of situation, they have to cover those shares by going to the market and buying them. The same stock that they bet against, they now get forced to turn into buyers. And because you zoom in on some of these companies that have a lot of short interest versus the average daily volume, when they do it, it causes a splash and jacks the stock through the air. So let's look at three of these that I pulled up for you. One of them you might know. Actually, I guarantee one of them you know. Second one is going to be something that you heard of. Maybe a few of you take it as a guilty pleasure to watch it. And I'm not talking about the Real Housewives of Beverly Hills or anything like that. First one, though, Zogenix, which on the 26th got FDA approval for one of their drugs. It's a biotech company. Look at the trade here. It's been moving sideways. 50-day and 20-day have been coming together. And look at what it did yesterday. If you follow me enough, you know that when a stock breaks its 20 and its 50-day on the same day, it normally makes a nice, strong rally. This stock also has 9 times its average daily volume. 9 times. Jerry, yeah, we can... I may be guilty of not changing a Real Housewives channel every once in a while when I click upon it, but it's only when I'm falling into a little lull of a sleep, maybe an afternoon nap. Anyhow, 9 times short interest ratio. It's going to break through $30. Its 50-day moving average is trading slightly higher here, and we just broke above the 50 and the 20-day. This is a prime short interest candidate, short covering candidate. RSI is not overbought. You're going to see volume start to kick in on this stock. Thanks for picking up on that, Porter. I was hoping somebody would get my Ed Rooney there. So you have right now room for this stock to move above, and I'm shooting for somewhere around a 34 print on this stock, I think, before the shorts get covered. Zogenix, ZGNX, 9 times a short interest. The next one, guilty pleasure for some. Maybe I have a friend actually that works for one of the wrestling organizations, the IWE, out of Jacksonville. He's a stage manager, does all the production. Worldwide Wrestling, though, WWE and the famous Vince McMahon, when you look at the stock breaking above the 50-day yesterday when it closed at 44.82, that 50 days at 44.45. Thing about this is it's also got its 50-day or its RSI right in the middle, and you see the volume lightly traded. Think about what the WWE is got going on right now. They are shuttered. I mean, they're wrestling in front of themselves, and it's kind of fun to watch. My friend has pointed out you should watch this sometime because all the wrestlers are standing around the ring with their masks on, and they are the best hagglers out there, are the best trash talkers, better than any crowd that you could put in the stand because they know each other personally. WWE, though, 7.7 times the average daily volume in short interest. It went up 20% on the last report after I ran my model. RSI is right in the middle, gives you plenty of room to the upside. You're looking at a 49 print, maybe even it stretches to 45, or 50. But I'd say more safely, you're down around 48 on this stock from its close at 44.82. A nice little poke there, 10%. That is a cool little short interest trade. I hope you take a look at it. And the last, I know you guys all know because it's one of my favorite boxes to get on the porch from the Stone Cold Killer and Obi, Chewy. Chewy.com has been going sideways. We were talking about Chewy way back in April. The stock has gone up, come back down, come up, come back down. Kind of like a few others I know. Etsy is one of them. It's been a little higher, though. Pinterest broke out yesterday by 4%, 5%. But Chewy bouncing off that 50-day. Look at the test. 50-day tests for Chewy have been nice for the stock. It tends to rally right out of the gate. You got the 20-day that's coming down a little bit here. $52 is going to be your target from its close at 46.46, 46.50. And once again, look at that RSI right in the middle. You are getting into stocks right now that aren't overbought and they're not oversold. If they were oversold, I'd like a little more, but they wouldn't be breaking above their 50-day here, folks. There you have it. Oh, and I forgot to mention, you're at about a 6 times short interest compared to the average daily volume. It's about 9% of the actual float of the stock. That's another one of the key figures that goes into my modeling on the short interest calls. I'm going to be writing a little commentary that'll probably make its way up to the website on Monday on a few other short cover rally potential stocks, we'll call them. But this is a play on fear and greed. Right now, you've got the greed of the short sellers that are trying to call a top on a market that, quite frankly, is climbing a wall of worry. That's where your fear comes from. You put the two together. Jerry, iRobot is high on the short interest. It's high on my list because people are buying houses. I've got 2 in my house because the dogs shed and it won't go down the steps. If they can figure out how to do the steps, it'd be even better. You're correct. iRobot is another one that is up there on the short interest ratio. And I think their short interest float is somewhere around 20%. Love it. Love it. Love it. Love it. All right. So I've got time for a couple of extra questions. 9:15. That's a quick half hour that we've got there. Couple of questions. I'm going to go over to the Q&A area, see if we've got only 2. Only 2. Let's switch over here and take a look at the screen and get the chart up. James, there is a way to get a replay, I think, if you're talking about today's. Oh, and by the way, I did want to put up very quickly. Let's see. There we go. A little link for you guys. This is one of those situations where it's a commentary. You guys hear about it quite a bit. When I take my walk down Main Street, I'll be doing another one this weekend, probably not on the 4th, probably on Sunday. But yes, you keep Xilinx, guys. Financials are in bad shape. I'll do those in just a second. That is a link to an article that just went up on moneymorning.com yesterday on 3 of the stocks that my recent walk down Main Street has kind of given me. Interesting look at it, and obviously something you guys are familiar with here. So let me grab the Q&A real quickly, and we've got pizza. Daddy-o, as the kids used to sing in the backseat of the car and drive me crazy. So Papa John's Pizza right now, this stock has actually been in a nice consolidation here when you look at it from a sideways perspective. Pizza was hot during the outbreak of the coronavirus or the COVID-19. You have to look at the restaurant industry right now, guys, and I'm going to comment on this in just a general kind of situation. You have to look at the restaurant situation. And look at Bloomin' dropping, what, we were down 9-10% at its lows yesterday, and it bounced back off the $10 level. That's going to be in play here. Wendy's is actually doing a little stronger than I thought it would. And I'm looking at casual type of dining right now, up around that 20-day, and they've got the drive-through open. Obviously, McDonald's is going to open a little lower today. I think it was 0.8 lower in the pre-market, simply because they announced that they're going to not go forward with moving or opening up dining rooms. McDonald's actually has the tide turning against it. When you look at the 200-day, the 20-day, and the 50-day, what I'm trying to say is the restaurant industry is kind of running into a situation where people are questioning that grand opening and whether or not they're going to be able to remain open. Papa John's has a little bit different. You pick up the pizza at the window, you pick up the pizza at the front door, just like Domino's. You look at these two companies, and I think these are the ones that, as we head into I don't have the ticker for Domino's. I thought I had it loaded in there. You look at these two companies, and you have to say, are we going to go back to pizza? And I think the answer is yes, but I also think the answer is we're going to go back to the Kroger too, and start hitting the Kroger again. And notice how we're back up on Kroger above the 50-day and the 20-day. People are starting to buy stuff again. Pizza's not the thing. It'll come back if we really get locked down. And where you'll really see Papa John's and Domino's Pizza and a couple of others start to rally up is when we get into the colder months and this is still going on and nobody wants to go to the store at that point. So that's my view, not kind of on pizza, on Papa John's, but also on the restaurants in general. Plug Play got an upgrade. This is one that I always throw my first disclosure out here is that I own the stock. So I don't like to give recommendations to buy the stock because I own the stock. I think the stock, and I can just comment on the charts. I can't tell you whether it's a play or not. I can tell you that this is a company that obviously the value is finally getting realized. Years and years, Plug Play. And if you look at the chart of Plug Play, it has been one of these stocks that came alive, and you can see it. Back in 2006, 2007, the stock was trading up in the 40s. It has been where it's going now. If you remember, this is also when we started to have Tesla and a couple of other people talk about alternative energy for cars. I'm calling it alternative energy for cars. The hydrogen process was starting to become a little bit breakout. I think right now you finally got technology catching up to everybody's hope and aspiration and their optimism. And you look at the stock sitting right under $9, up another, 10 or 15% yesterday. And this caps a week or so of moving from $6 up to $9. So 50% you've got net that the stock has made there. This is a stock that I see more and more upgrades coming. It's a second upgrade this week. And you've got to look at others. Ballard is also in the group here. It's a group that is coming alive right now. Part of it is because Nikola has come out and said, hey, we're making trucks with hydrogen. So they're using, and they've calmed down since they did that IPO, that offering that they did, 3 weeks ago. But there's a new age in energy. Plug Play is right there. And I think you're going to continue to see more and more upgrades on them. Baba and Baidu, Sebastian, China's heating up right now from a trade perspective. Obviously, Hong Kong becoming more of a fulcrum for this situation, along with whatever's going to happen on trade war. My concern, if I can get up there and put my soapbox on, is that my commentary is that as the administration starts to fall behind in the polls, you're going to find that they will start to be targeted in things that they can say that they won. One of those being a trade war on China before we go into the voting booths in November, or if you're mailing in a ballot before you mail it in November or October. So the situation, I think, turns a little more serious as we see rhetoric in Hong Kong now start to increase. The talk of starting, and Marco Rubio is working on a bill right now, writing a bill that will limit access to capital markets, supposedly, for Chinese companies. You have to consider that with Baba and Baidu. When you look at the charts, they have been, we don't want to look at BAB, we want to look at BABA. When you look at the charts, the stocks have been in a quandary as to what they're going to do. Alibaba trading between a range of 220 and 200, just bouncing around, Jerry, like a BB in a boxcar. So this is one where the market's already looking this as a potential pullback or a potential drawback. Baidu doing the same thing right now. So if we find that these companies do come under the target of some sort of legislation, obviously you're going to see, I don't think they get delisted. I think that you find all kinds of regulatory things that are going to start to come. Yes, last night's request or yesterday's request from China for information from 4 news agencies. I think it was Reuters, NPR, CBS, and I forget the fourth, quite frankly. That's a scary thing. It's lowering the boom on the United States, saying, hey, we're getting more serious too. Watch these companies for a little bit of fallout from the political rhetoric. That is probably as close as I can come to saying, what the heck? This is something that, right now. Thank you, Zachary, DPZ. On the Domino's Pizza call, and obviously this is one that's gone sideways as well. If they could start figuring out how to deliver some really good food and not have it be through, I think most people are tired of having Grubhub and Postmark and all of these guys show up at your door. Also, a lot of people, and when you look at this on a side note, the alternative to these plays is your Uber Eats and a few others that are in that area. And you know what? If you live in the city of Cincinnati, there's a 90-day period that they started about a month ago where they actually said, you guys are not allowed to have a separate menu with separate pricing for Uber, and they have to have the same menu, and Uber has to actually take their piece out of a smaller piece of the pie. So you're finding now communities are saying, no more of this 30%. If the restaurant needs a revenue and you're getting to be the conduit for that because you offer delivery service, it's going to be fair pricing. It's not going to be something close to gouging. That's what's causing some of the problems, along with the fact that Uber's just nobody's taking them. But that alternative of them delivering food is now kind of gone by the wayside. So watch these companies as they kind of haggle with that, if you will. You know what? Look at James asking about Biogen. Let's make this about, I'm going to go back to the chart here for a second, and we got about 2 minutes. 9:25, I've got to break off because I really got to jump on the market here in a few minutes. So if you look at this, you've got Biogen that has been a clear laggard in let's look at the IBB, pull up the IBB. So you've got the biotech sector that is going through the roof right now. One of the interesting things, when I looked at my short covering, and this isn't interesting, there's a maybe not little known fact, or maybe it is little known fact, but it makes complete sense. Biotech sector, along with small caps, are the largest let's call them short position groups of stocks. So in other words, when you look at biotech, on average, their short interest ratios around a 5. The S&P 500 short interest ratio around a 2. No chance of short covering. If you find them in the S&P 500, they're rare and they pick up and they go. So biotechnology, you're around a 5, sometimes a 6 and 7 average for all the stocks crammed together. The biotech stocks in general right now as a group are being led higher by a short covering rally. That's why when you look at the IBB, or if you look at the XBI, which is the other big time traded ETF, I like the IBB a little more myself. XBI, they're both trading the same though. These are the sectors that are really taking off right now. And they've got huge amounts of short covering that are going to be coming up behind right now and kind of closing out. They'll be the final act of this rally. Both of these sectors as a whole right now are in rally mode. You look at a Biogen, though, and it's being left behind. Short interest ratio on it is down, I think, at 1.7 right now, and the technicals are failing. Let's put it bluntly. This is a stock that at best is a trading range between 340 and 260, and even that is a little bit shaky because you've had so many fits and starts. Biogen, Johnson & Johnson's a little bit different story. Obviously, you're seeing something with COVID-19 that's giving them that little bump here, but at the same time, it's kind of lagged off. People are looking to the partnerships with the small biotech companies, and this is why you see a difference with the XBI. You are seeing more partnerships with the big drug companies, putting the small drug companies, funding these small drug companies, and making that a more active trade. So Johnson & Johnson is busy in there trying to get other people to develop something. Pfizer, obviously this week, comes out and says one of their collaborative efforts is producing results. Look at where Pfizer's been. The people that are making book, the financiers of the vaccine that's going to solve all of this, are only going to get a little piece of the pie. It's in the XBI, and the company that has the lottery ticket or the golden Willy Wonka ticket that's going to make all the money. Biotech, you want to play the smaller companies, and CVS, this is one, you call it a retail, and the retail sector obviously has been mixed. It's hard for me to get excited about anything in the retail sector right now. XRT continuing to move sideways after it hit that high up around 44 and starting to roll over. And you're going to see a battle here over the next month with the XRT as we see even more companies start to say, yeah, maybe we're not going to open, or maybe malls aren't going to be busy. Watch the XRT. So I'm going to hit one more Oxy split, Occidental. They did split. There were 3 splits actually in the energy sector this week. Occidental being, I mean, these companies right now, and they're not showing up with the split here, but you've got 3 companies in the energy complex. This is a survival of the fittest. Call them phantom companies. There's a 200-to-1 reverse split by Chesapeake that happened back in April. The splits don't help it. It just gets the price of the stock back up a little bit so it's palatable. Look at Chesapeake that's trading out at 11.85. This is a situation for a 1 to 200 split. They're just trying to stay listed, keep everybody's interest, keep their dividend, and keep paying their salaries. Watch for a lot of companies to start coming together, start getting acquired in this area. The last one I wanted to mention, because I always like to close with giving you something that you trade. And if you look at what my last chart was, trading the hump day today, and it's not the hump day, it's Friday. We'll see lighter volume after the 11 o'clock hour. It's going to happen, folks, even though we've got a lot of catalysts here. President Trump's going to be speaking here in a few minutes. He's going to talk about the jobs report and how good the report was. Expect that to just be a little bit of a push for the market. You'll see Larry Kudlow out there with him as well. And it'll be talk about how good things are getting. It's a comeback. It's not a strong comeback yet, though. And we're not done. We'll see the bandwagon rally through the day. It's likely to close on its highs is where I see this market closing today. I really do think that you're going to see everybody kind of piling in. Traders this week are going to be willing to hold through the long weekend just because the headlines are not bringing stocks down right now. Headline risk has been reduced. Final thing is mind your hedges. And on that, I go back to the financials. Somebody asked about the financials. SKF is the way that you hedge those financials. Fast profits coming your way up on moneymorning.com. The latest one, I talk about the SKF and how it's in a position where you want to buy it right now. I also give details on a put on the XLF. This is not a sign of health, folks. When we look at the XLF and it's going below its 50-day moving average, as the rest of the market's trying to challenge new highs here. Hard rejection at the 200-day moving average. The 10-year moving higher towards 70 basis points is going to help them out, but it's not going to be enough. It's not going to be enough, folks. You got to watch these financials. They're going to be the first ones to start to announce. I think it's the 15th or 16th of July. That's going to kick off the earnings season. Bank of America, Citigroup, Goldman Sachs, all the big boys are going to put their numbers out there. They're going to have their statements about COVID-19, and they're not going to give us anything to look at. It's a kitchen sink quarter for earnings, but these guys are a little further down the drain than the kitchen sink right now. So watch yourself on the financials. Mind your hedges. Market just opened up. We're up 1%, 1.5% on the dividend yielders. Watch your dividend yielders too. 1.2% on the S&P 500, and the Russell up 2% out of the gate. Watch the Russell in trading today. Risk on, risk off is a big difference there. I want to see it beat the S&P 500. I'll see you guys Monday morning. I'll be with you. Enjoy your 4th. Be safe with your fireworks. Be safe anywhere you go. Socially distance. Best trading success to each and every one of you. And I'll see you Monday. Have a great weekend, folks. Bye-bye.